Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Hi everyone, how you going? Thanks for joining us on the show today. Going to do a deep dive into data, and data is an interesting thing. I'm very fortunate they get to cover a lot of ground when it comes to property investment. And I meet investors of all shapes and sizes and intellects, dare I say it, and how they approach the world of property investing. Some people are very sentiment driven and they'll shape their decisions on gut feelings and instincts. Other people are very much geared towards the numbers leading the way, and they take a lot of the emotion out of the investment and make the determination of investment decisions on what they see around them. Now, that could get pretty complicated, and we're fortunate in Australia that there is a lot of very good outlets for data, but data is only good as the narrative you put around it and how you use it as part of your decision making. I'm no expert on this by any means, but I am a bit of a data nerd, so I apologise if I get a bit too technical today. I'm probably quite a sit in the middle on sort of a topsy-turvy seesaw of I'm able to balance the narrative with the data and actually use data to make more informed decisions when it comes to my portfolio. In the studio with me today to have a chat about this and what it is all about and how you can use data to determine the drivers of capital growth. Jeremy Sheppard, he is the Director of Research at Select Residential Property. You might have seen him on the TV recently. He's getting quite a lot of airplay around some of the stuff he's doing. He's come to the studio. Jeremy, how you going, mate? You well?
Yeah, good. Thanks, Phil. Thanks very much for having me on your show.
Are you like a proper data nerd?
Yeah.
Unashamable data nerd? It's okay. It's
I won't say that I love it,
yeah,
but I treat it like gold. Yeah, it's absolutely crucial to everything I do. So, yeah, I'm in it every day and can't wait to get more data sets. So, yeah, I guess I am a bit of a data
So it's the first when you wake up in the morning, you go, oh, wow, I hear there's a new series of data coming down the line. I think I can do this with it. Is that how the brain works?
I definitely am thinking data as soon as I wake up.
Yeah. But
it's not so much new data sets, but existing ones and just diving in and finding more insights from what little data I've got.
So for a lot of our listeners, they might be quite comfortable dealing with big data and understanding data and using data. But if you're new to investing, it can be pretty confusing, right? It blow your mind, right? And a lot of people get caught up with data, and it means they never make an investment decision because they always overanalyze and overassess. So for you in property investing, like why data? Why is data so important? Good data, by the way.
Well, for me, without it, you're flying blind. You are at the mercy of your emotions. You're making subjective decisions. So from my perspective, it's something that gives us a basis. And I'll admit that despite crediting data with so much, I still make emotional decisions. I'm still looking at things from a subjective perspective. But having at least a foundation to build on is going to save so many investors a lot of trouble. I mean, we get investors coming to us every week. There's a disaster story, and I think, gee, if they just had looked at one metric, it could have saved a terrible financial situation. So although it's not the be-all and end-all, I think it just puts us on a great track. It's a great platform to work from.
So I'm hearing around the traps that they got this nickname for you, the Capital Growth King. What's all this about?
Yeah, it wasn't my idea.
Yeah.
I mean, it's catchy, I suppose, but I was thinking Capital Growth God would have been better. King's a little lowbrow, No, I've always called myself a data geek rather than a king.
Is there a difference between a geek and a nerd? I'm trying to work it out.
Oh, yes, I think it's the same thing.
Geek's a bit more of in terms of endearment type, and our producer here he's a bit of a nerd. I think he's just nodding his head, but it's cool. I don't mind being a bit of a nerd or a geek. So why data for you? How did you end up doing what you do today?
I used to look at data in the back of property magazines. This is going back about 20 years now. And I just thought, look, if this is all I knew, what would I pick? Here's a list of suburbs. I've got some metrics about 5-year growth and 1-year growth and vacancy rates and so on. What would I base my decision on? And it got me to thinking about each of those metrics and how are they relevant? What is really going to drive property? And I guess I realised that there's a lot more data out there that I could acquire and it would help me make a more informed decision. And I can't really remember that penny dropping moment, but I do remember thinking, this is all about supply and demand. That's what drives the price of everything. So I started looking at all of these property metrics from that perspective. Is this a demand indicator? Is it a supply indicator? And then it was, how can I get my hands on all of it? What other metrics are available out there? And I used to work in IT, and so I wrote some screen scrapers which would go around and acquire a lot of data, free data from websites. It's just publicly available. And I just put it all together and came up with this algorithm to try and give me a good idea of what the supply and demand is for markets around Australia. And I remember looking at the first one, it was somewhere on the Gold Coast. I think it was a unit market, and this is going back like 10 years now. And I just wanted to contact some of the agents and ask them, what's going on there? And they treated me like royalty. Come up here, Jeremy, we've got so much for you to choose from. And I realised they've got an oversupply issue there. So this was at the bottom end of the spectrum. And then I looked at the top end, and they treated me with contempt. We've got enough buyers. Who are you? Call me back when you've got some more money. And I realised, okay, I'm onto something here. I think this analysis of the data is identifying markets with high demand and low supply.
Which is the holy grail for property investors, and whether or not you've been in this game for a little while or you're new to investing, this whole demand versus supply, supply versus demand, these are the mechanics of what dictates markets to move, whether it's up, down, left, right, or whatever. For you and for our listeners who are new to investing, how would you really crystallize this whole concept of supply and demand, and why is it so important?
Well, I mean, this goes beyond property. There's every commodity, service, real estate's no exception, is governed by supply and demand. So it's a fundamental law of economics. I think it's been around for like 400 years. So it's something that's not going to go away. This is how we operate as humans. And that means it's a great basis to make your investment decisions on. The devil, of course, is in the detail. How do you know what is demand? You see people turn up to an auction and they're bidding each other higher and higher. There's a good indicator of demand. So auction clearance rate's a great indicator of demand. The problem, of course, with that sort of metric is it's quite short term. The auction clearance rates of 5 years ago have no impact on property markets right now. It's current auction clearance rates that you want to look at. And what about markets where they don't have auctions? There's all these issues with the data. So you need a very broad range of metrics to look at. And it's a case of how do you munge all those together into something that gives you a good overall opinion of a property market. And you'd expect that when demand exceeds supply, prices are going to rise, and nothing subdues demand like sky-high prices. So it all comes back to balance. You can't have markets that are high demand, low supply forever. They have their surge of growth, and then that brings the market back to balance.
So considering supply and demand and the concept of the work that you do, Director of Research at Select Residential Property, it's about what does all this mean and how does it help you identify areas for capital growth? So I really want to drill down into that, these drivers of capital growth, but beforehand, just a quick break. Welcome back, everyone. I'm here with the Director of Research at Select Residential Property, also called the Capital Growth King, Jeremy Sheppard. We're chatting supply and demand and how you can use the metrics or the indicators of that to really understand the drivers of capital growth. Now, Capital Growth King, you're obsessed with capital growth. Why capital growth? Why is capital growth so important as a property investor?
Right. Well,
it's the big question.
It makes such a big difference. My first investment property, I was right into renos. So I picked a rundown property in Western Sydney. It was like, 40, 50 kilometres away from the CBD. And I bought it for $206,000, and I had enough money left over. I thought, here we go, I'm going to do this big reno and I'm going to force the issue. And I had so many problems with that. I was so inexperienced. But I happened to pick a market that was booming. And I borrowed against that equity and bought in another suburb that wasn't so far away. And, of course, Sydney was still booming at the time there. And eventually, after I think it was maybe a dozen or so properties I'd bought, I realised in all of these cases, the renos weren't the answer. This didn't really shift the needle. I'd bought into markets that had tremendous capital growth. And some of it, I was a bit lucky with. Sometimes I'll credit my research for it. But it really shifted the needle more than yield. In fact, a lot of the time I was just chasing high yields, and I realised that nothing really shifted the needle in creating wealth like capital growth. It supports every kind of investment, whether you're doing a subdivision or a development, whether it's a reno or you're buying for yield, for cash flow. If you've got that capital growth, it really changes your portfolio alarmingly. And I realised that's it. That is the holy grail of property investing.
And I chat to a lot of investors, Jeremy, and, I'll ask them, what do you do property? And they go, I love property. Everyone goes, I love property. I just love property. And I go, why do you love property? And I go, I just love it. I get it. I understand it. And you always get to the bottom of all those discussions. The end of all those discussions is they love property because they like the empowerment it gives them to create a better future for themselves, right?
Right.
It gives them choice, and choice is the capital growth. If you invest well, you create capital. It means your investments go up in value. That means that you're wealthier than what you were there you started, and that wealth you can use for certain things. And for some people, it's sitting on a beach, or it's drinking pina coladas, or it's traveling around the world, or for some people, it's continually put it back in there and they like the game of investing. So you cannot be a successful property investor unless you get capital growth. That's a fair statement, right? You don't do it just for the love of it. You don't do it for the love of losing money.
Yeah, that's right.
You do it for the love of making money.
I mean, for me, it was just a means to an end. I was looking for an investment vehicle. When I got into property investing, it was after failing with shares miserably. And the only reason why I got into share investing, because I got into my 30s and realised I don't really have anything. My super manager would send me a statement each year telling me here's how much
isn't it? Yeah.
we've lost and here's how much we've charged you for
The privilege
losing
of losing it.
I thought, if I take matter into my own hands, I think I'll be better off.
So considering capital growth, what should an investor, in particularly, but also buyers, because most owner-occupiers want their properties to go up in value as well. When you're thinking of capital growth, what are the key metrics, the key indicators that you need to be looking at?
Yeah, well, there's so many, the well-known ones, auction clearance rates, selling times, how quickly property gets sold. Vacancy rates are well-known as well. Percentage of stock on market, there's a supply indicator there. There's online search interest, which people might not be so familiar with. It's just the number of people that are searching for property versus the number of properties available in that search area. And then you've got all sorts of fancy ones. We've got one called the ripple effect potential, which is measuring how much capital growth there has been in neighbouring markets and whether that's going to ripple over into the market that you're analysing. A similar one is neighbour price balancing. We've got market cycle timing, rental growth, sales growth. I mean, there's loads of them. Some of them aren't all that effective at indicating future capital growth, but that list there, that's a good starting point. Yeah.
So if you're new to investing, would you recommend that you've got to actually understand, because you use a lot of big words there for people going, I've got no idea.
Yeah.
Like you really need to actually understand what these drivers and dynamics mean. And we cover this a lot on smartpropertyinvestment.com.au, so go and check it out. But not all data is created equal. And then you've listed a number of indicators there which have a positive or negative effect on capital growth, but you can get way caught up in data, and there's a lot of data, sort of fool's gold out there, where people becomes so obsessed on it, but really it doesn't matter that much. What data, in your opinion, do you think is real sort of fool's gold stuff?
I think the easiest and most obvious overrated indicator is population growth.
Okay.
Now, at a city level, like a macro level, Australia, city, I think it works. But when you start looking at a micro level, like a local government area or a suburb, it can really get you in trouble. So there are these areas that property developers call growth corridors, and it's not the kind of capital growth they're talking about. This is
the
like
growth of their bank balances, right?
That's
Through
right.
flogging apartments and houses.
It's a supply. It's here's a big tract of land that local government has opened up for us to build, and supply is the enemy of capital growth. So these are areas you want to avoid. So it's not a capital growth corridor; it's a supply corridor, and that's a bad thing. And the only way in which population can grow dramatically at a suburb level is with new dwellings. So the dwellings have to go in there first, which is a supply issue. And then if people want to, then they can move in, buy or rent. So wherever there's massive population growth at the suburb level, it means supply growth, and that's a bad thing. So, that's a really misleading indicator.
You've just said something there that I think you've probably crystallised property investment better than pretty much anyone I've met. And if you listen to this, write this down right now. Get a pen or type it into your phone or whatever you listen to. Supply is the enemy of capital growth. That's property investment in a nutshell, right?
Yeah, you've got to avoid those areas. And the thing is, they are marketed to investors by, developers and their project marketers and partners and so on as being a great opportunity. But they are the very locations you want to avoid as an investor.
And these are growth corridors. So you're thinking in the dynamic of your capital cities, your fringes where you've got greenfield sites. And in Melbourne, it goes forever. At least in Sydney, you're sort of capped by National Park to the south, water to the north, and mountains to the west, right? But it's all these infill areas as well. And I know Brisbane, for example, has a huge amount of infill areas where, and that's going to impact supply as well. There's a lot of places which are going to get greater density. So that means there's greater supply. Again, the enemy of capital growth. So these are the metrics of it all. And, I really want to get down and have an understanding of what sort of approaches to research you think, Jeremy, are a waste of time. But before we do that, just go to a quick break. Back in a moment. Welcome back, everyone, here with Jeremy Sheppard. He's the Director of Research at Select Residential Property. And if you're tuning in just before the break, this big question around, what is fool's gold? So there's a lot of data that just doesn't matter, or data that could be manipulated by people with a particular intent of painting a particular story, growth corridors, et cetera, et cetera. So we touched on that, but Jeremy's going to be nice enough to write something for us about that on smartpropertyinvestment.com.au. But people's idea or views towards research means a whole bunch of different things, right? Some people's research, they think sitting there on the lounge while Married at First Sight's on and flicking through realestate.com's looking at property is research. That's not research, right? That's not research. That's sort of market awareness, right? So for you, Jeremy, what approaches to research do you think are a waste of time? What is just not necessary and is not adding to or inhibiting your approach as an investor?
Well, I think when it comes to asset selection, so you've found your suburb, now you want to find a property in the right street in that suburb. I think people get hung up a little bit too much on what's around the suburb. So they'll be looking for things like proximity to schools and shops and transport nodes. And there's nothing wrong with that. But the thing is, those amenities have probably been there for a long time. It's when a suburb gets new amenities that you can see a shift. If the train station's been there for 20 years, the school's been there for 20 years, the shops have been there for 20 years, the benefit of being in close proximity to all those amenities has already been factored into the price of property there. So you're not going to see them continually outperform year after year. New amenity goes in, okay, you'll see a little bit of push and shove as the market balances. But long term, these inner city markets have got all these amenities already. There's no driver to see a surge in growth. And so you can see some of those middle ring suburbs have accelerated rate of growth where they get a new amenity, and it does mean, this is more attractive to potential buyers. So they could probably waste a little bit too much time looking at those sorts of things and proximity to amenities. I mean, having a property on a main road, for example, that's one classic where we always say, you probably don't want to buy on a main road. But there are people from cultures around the world where noisy main roads is no big deal. And they come here and it's like a cul-de-sac, living in a cul-de-sac on a highway for us. The electric cars might reduce noise into the future as well. There may be less honking of horns if you have driverless cars, for example, in the future. So it's possible that a little bit too much attention to proximity to amenities is wasting a lot of people's time with their research.
So you're a creator of this DSR, which is demand-supply ratio. So you've painted it that way, demand before supply, to show a positivity ratio, the higher the better, right? Tell us a little bit about this, and this is a tool, because I know you've got some sort of products around this. We can have a quick chat about them that helps people leverage this ratio, an algorithm, the secret sauce of science. So the DSR ratio, how can you use that as a property investor to make more informed decisions?
Yeah, well, the thing is, let's say you've got a market that has tremendous auction clearance rates, for example. It's up above 80% every weekend. But then selling times are really slow. Well, which one of those two metrics is more important? And then you factor in vacancy rates and which of these are supposed to be more important. You could spin your wheels for a long time looking at all these different metrics, not knowing which one's more important than the other. And you've got all of these metrics to acquire in the first place. So the whole idea of the DSR was to come up with just a single score that gives a rough idea. It's munged all of these metrics together. And because we're doing this calculation for every suburb around Australia, you can compare like with like. So you're comparing units in Subiaco with houses in Leichhardt. And it's that convenience that means it's tremendous value to investors because, first of all, someone's already gone to the trouble of figuring out which metrics are more important. Secondly, they've gone to the trouble of acquiring them all. And it also gets rid of all the complexity. Which one's more important? What does this metric mean? Is 1% stock on market, percentage stock on market, is that good or is it bad or is it just middle of the range? So the whole idea of doing that DSR was so that I could just quickly look at a single number and know, is this suburb worth more of my attention and do more fundamental research for it?
And have you really stress tested the ratio? Like, because imagine you're tipping in, and I'm a real visual sort of guy, right? So I see this big pool, and you chuck a whole bunch of data into it, and you tell it to talk to each other, and you tell it to talk to each other in a way in which can help create some science out of it. That's the algorithm that you created. Like, does it work? Does it actually work?
I'm amazed of how few people have asked me that question. It would be the first question I ask anyone.
Yeah.
Does it work?
Does it work?
Yeah. Well, what I first started doing was, I first assumed it would work, and then I compared it to, dare I say it, loudmouths in the industry, people that have made a lot of picks in the past. I thought, okay, this is what they've picked in the past.
Okay.
Let's see how the DSR has performed.
You're making friends, are you?
I'm not going to mention any names.
No, let's not name names.
Yeah.
No.
I was quite surprised, actually. A lot of experts in the industry are very good at marketing themselves and may not be that good at picking growth locations.
Okay.
There was no contest, and I had to actually change the way in which I assessed the DSR, because comparing it with a lot of outspoken experts, I mean, they struggle to outperform the national average growth rate.
Yeah.
So I wanted an algorithm that obviously easily outperforms. So it's been running for almost 10 years now, and if you were to pick randomly any suburb in the top 100 as ordered by the DSR, now this is just at random, so doing no other research at all, you would have an 80% chance of outperforming the national average growth rate.
Okay.
And out of those, roughly 80% of those would double the national average growth rate. So you've got roughly a 60% chance of getting double the growth rate of the national average, and this is over a 3-year period. So
And
it
that's
is
tested,
short-term.
it's proven.
Yeah. We've had enough data over enough months to, over a 10-year period in varying different markets to see, this thing works.
So this comes back to my opening remarks around the power of research and utility of research helping to make more informed decisions. That's powerful information to actually get that, to actually shape buying habits, behaviours, where you channel your efforts, because research is research. It gives you a head start. So if you're looking at, say, Sydney, for example, and you're trying to analyse and assess every single market, it's largely impossible. You've got to hone in.
That's
when
right.
it comes to the utility research, hone in your focus so then you can go deep dive into it. So if you can identify a suburb which is showing the indicators for growth, then you can actually go in there and inform and educate yourself
and
even further.
that's how it was always designed, just a short listing tool. Give me the top half a dozen, and then I'll research that further using, pay a visit for starters. So, it was just an ability to filter out that 99% and focus on the remainder with, the little time that you've got, because like you say, you can't research every suburb
It's
properly.
impossible.
Yeah.
So is this stuff accessible to the public now, or is it just some secret that you're holding on to?
We've published it on, we've got locationscore.com.au. That's meant to be very simple so that people can easily use complicated technology to get them started in their property investing. And it's affordable too. So for the value that it gives, I mean, like we were saying before, capital growth is the ants pants of property investing. So it's, you pick well and you're tens, maybe hundreds of thousands of dollars better off. So, people balk at paying for reports. I've always thought, no, I'll pay top dollar to get the best reports because it's such important intel.
Well, this is, being a successful property investor is a really tight marriage between data and information versus the narrative and the ground truth of a particular suburb. So my view, and, I'm always looking for the most efficient and effective way to get to a point to make a decision. Let technology do the heavy lifting for you and give you all the clues to actually put you down a path so you can apply the human element to it. And I think that's what we're talking about here.
Yeah. It really is just the start of your research. Yeah.
It's a good start. Jeremy, I like this name, the Capital Growth King. Let's see how that evolves and goes. But really appreciate your insights. And I think we've touched on a whole bunch of really complicated and sophisticated terms, which for a lot of people might be blowing their minds. So go check out smartpropertyinvestment.com.au. I want to get Jeremy to actually put some pieces together around these drivers of capital growth and where to start. I think that's really, really important. If you're not familiar with it, there's no excuse not to be educated in property right now. So if we can help you out with that to get you thinking about these things, and then you can go down your own journey and working it out. But what did you mention? It's at locationscore.com.au, was it? Okay. Yeah. All right. Yeah, go and have a look at that as well. I'm going to go do it myself. Really appreciate you coming in.
Thanks
it's
very
good.
much
I've really
for
enjoyed the
having
chat,
me.
and you can see sort of I got a bent to being a bit of a data geek if required. So I love chatting data, and if you like chatting data, if you've got any questions around data, make sure you get in touch with the team here. We'll get those questions answered. We might even get Jeremy back in. We can just do a data Q&A if you want to.
Sure.
If you want to go about doing that.
Yeah, happy to.
Editor at smartpropertyinvestment.com.au. Email that list. And while I'm on that, apologies if you have written into that email address or reached out on Facebook. We haven't got back to you. We do apologise. We're right on it right now. So make sure you send that stuff through, communicate with us, let us know what's going on, and we'll make sure we get all these questions together and get them answered. We'll do our absolute best. We get a lot of them, so we'll get around to them. But we'll get Jeremy back in. We'll have that chat. Hope you enjoy the rest of your day, Jeremy, in the world of data and exploring those things. And
Thanks for having me on the show. Phil.
Don't be a stranger. Come
Sure.
back and have a yarn to us. Remember, smartpropertyinvestment.com.au. If you're not yet subscribing to our daily morning newsletter, so you're the first to know what's happening in property investment right across Australia and data, smartpropertyinvestment.com.au/subscribe, or on social, just Smart Property HQ. Go and check it out. Please keep those reviews coming. We love them here. We'd like getting the feedback from everyone. We've been getting heaps lately, so keep them coming through. The guys get a real kick out of it, particularly James, who's sitting here with me in the studio, our producer. Love seeing him. He's the guy that does all the talent behind this thing. It's just not me gibbering on behind the microphone. So he gets a lot of satisfaction out of seeing those things come through. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.